Hey everybody, did you miss me? On a scale of 1 to 10, let me know in the chat how you think Kimberly did. 1 to 10, let me know. And welcome everybody. Glad to have you, Larry, Valerie, David, Donald, Sergio, Philip, Rex, Arturo, Craig, Francois, Kenneth, Goose, my man, Lieutenant Colonel, retired, Terrence, Indy, Sledge. Glad to have you, Jan, Ed, Rob, Dave. As always, glad to see you. Kimberly's in the chat. Hey, my favorite subscriber. 10 for sure, huh? General Rush, good to have you, sir. Rizio, Patrick, did great. Only one person rated you, though, babe. One person. All right. Welcome, everybody. And so I didn't get to talk about the algorithms yesterday. Obviously, I had jury duty. And, well, turns out when you voice your opinions, such as I might, I kind of pop on here and give my opinion every day. When you do that, turns out you're not, I guess, not necessarily jury material. They're not going to sway your opinion on things. So I may get called in tomorrow, Thursday or Friday, but probably not going to be on a jury. It seems to be the rolling consensus anyway. So, like I was going to talk about yesterday, CTAs. Yeah, Kimberly was just like, I don't know how to talk about that unless you can write me up like pointers. So, CTAs seem to have already kind of done some liquidation. There is the potential for a bigger down, more liquidation, but in most cases, 3 out of 5 cases, we kind of are either going to hold it steady or rise from here. That's usually been kind of, we're back to flat essentially on the CTAs, actually slightly negative even. So on that flow, so that can, we can see some inflows from algorithms coming in here. And systemic U.S. equity positioning actually took a big drop right there from mid-April down to May. I mean, we're not nearly as low as we were early 2023, but also, not early 23, October 23, excuse me. And so we came up and we've kind of floated along. There was some liquidations going on, and now we're in a position where we could potentially add back in. The systemic positioning almost got flat. That leaves room for bullish price action. And then the S&P 500 buybacks, we're already past the 50% window, coming up very close. We're getting up here, 5.3. Today's 5.7, so we're actually right over in here, and we're nearing completion of the S&P 500. Nearing completion of the S&P 500 right there. Here's what we got cooking this week. Right here, we've got. Yesterday we had Spirit, Cristal, not the hamburgers. I guess looks like DNA strands of some sort. Lots of biotech. That's what that looks like. Berkshire Hathaway, Tyson, and then after the close, and for some reason my taskbar is hanging open. There we go. And Tyson Foods. Anybody see the? Grab another can. And through that can. Anyway, anybody see the Berkshire Hathaway annual meeting? And it was kind of sad. Old Warren, he turned to ask Charlie, and actually asked Charlie for his opinion, and Charlie wasn't sitting there. So it was kind of a bummer. And he lost his longtime best buddy, and they did this a long time together, and it was just kind of sad. So anyway, after the close, we had Palantir, Lucid, and him and hers, Microchip. I'm not sure any of these made the list this morning. We'll have to take a look. This morning, Disney, Celsius. I know that one's on the list. Datadog, Crocs, Nikola, Ferrari, Race, BP, Rockwell Automation, and then after the close today, Rivian, Lyft, Twilio. Twilio used to be a big mover, but lately not so much. Oxy, lots of people following Oxy, I guess because Warren Buffett's position, but I don't know. We'll see what happens later in the week. You know, we're just getting this trickle down thing. We'll get this. Golly, nose itching. We'll get this trickle down thing for the next few weeks, and crazy enough, we'll take it right through June. We'll get a trickle of earnings all the way through June, and then start it all over again in July. The never-ending cycle of earnings. So, all right. Glad to have everybody. And let's get her at her. And I'm sure everybody wants to know what's on the charts, right? So, S&P. But first, before we get here, let's pop over here. All trading involves a substantial risk of loss, all right? I'm not telling you to do anything. Past performance not necessarily indicative of future results. That means just because I've said something and predicted something in the past doesn't mean I'll ever get something right again in the future, all right? I could be completely wrong starting tomorrow. It'd be a serious bummer. It really would. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell any financial instrument. No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. If you desire personal financial advice, hire consult a financial advisor. That's not me. I'm not your financial advisor. I'm not telling you what to do at all. Just point out some stuff that works for me, and maybe, just maybe, you can learn it with a little bit of effort and start doing better for yourself. I mean, nobody's watching out for you but you, all right? Number one, nobody is going to care about your money more than you do. Guarantee you. If you think somebody cares about your money more than you, what they're really caring about is making your money into their money. Think about it. They just want to. They're just scheming on a way to make your money into their money. Almost guarantee you. So S&P, we stopped right in the middle of that box that I drew on the chart from 5150 to 5200. We stopped right in the smack dang middle of that thing. Caution, unless we can get above 5200 with a nice close, not just one of these deals where we spike up here and then reverse it. All right, that would be like really not good. No bueno, as I say. I need like a cutscene for no bueno. A spike and reverse would not be good. Not at all. That's like almost a worst case scenario situation. If we spiked up and then came back down, we're probably going at least down to here, if not further down. All right. I can't stress right now how dangerous this zone is right now. If we can get above it, that's a big if, we're looking for 5350 up here at the minimum, right up in here. So this is like the bulls have to take it higher from here at this point. There's no, like, if we turn down here, odds are this is where we're going. Highly likely. And Russell was really making me nervous yesterday with the way that it was performing. Now, when we actually look at what happened overnight here, we're actually pushing on up into the top of the red zone. Haven't broken out of it yet. We're just the red zone. We do have resistance all the way up here to 5250 on ES. If we jump down in the lower time frame, allergies getting me a little bit. Sorry. Got some post-nasal drip going. And right here, I mean, look at this. Look at how reluctant that is to push above that red zone. How did I know where to draw the red zone? Years and years of watching price action. All right, it's just the zone around the 618 right there. It's a highly likely zone to find some resistance. All right, I was expecting that 618 to hold, possibly. We're pushing on a little higher. We're going to test the resolve of the bulls. Like, can they get continuation higher? Or are we going to reject and flush this baby out? So this is the big question. We have some catalysts that kind of balance the field a little bit. You know, the buybacks are starting again. Apple announcing one of the biggest, I guess it was the biggest buyback in history of all companies ever. And gives me caution right here. Now, we are light on economic news this week. There's no real economic news catalyst coming out this week at all. I mean, normal stuff like the jobs report on Thursday, but, you know, for the most part, there's no FOMC, there's no PCE, there's no CPI, there's no PPI, there's none of that stuff that usually kind of takes the market by surprise. None of that stuff coming out this week. So we're left up to earnings, which are we're getting some smaller companies, and then the will of the market. So we'll see what kind of resolve the market has here as we push higher. NASDAQ, right in the middle of the zone. And I did put a big target circle right up here that I thought we would go up and tag that and possibly turn down from there. We did push a little higher than the 618 so far. We have not pushed out of the top. You know, this one not pushing the top of that zone nearly as much as ES. All right, why do I watch ES more than the others? And what is ES? ES is the S&P 500 futures. NQ, NASDAQ, 100 futures. All right, NQ1 exclamation point. You're like, what platform does this even come up on? TradingView. All right, right down here, TV, TradingView.com. You can just go there and open a free account. Like, I'm not even trying to get a referral fee or anything from you. You can go open a free account. Look at all these symbols for free. All right, the little orange, yellow, whatever D's do mean the data is delayed by 10 minutes. So not unless you pay for data, which I don't do at all. I do have a paid account, but I don't have paid data to feed that paid account. These are delayed by 10 minutes. Now, the one that concerned me the most is this one. Now, overnight tonight, or last night, we did squeak out a little higher high, but all day yesterday, we spent this consolidation drifting slightly lower. Gave me very high cause for concern because we went into the close yesterday near the lows of the day. I took that as a warning sign. All right, the ES over here. Look at this close yesterday. I would just zoom up and highlight something really quickly. Right here. This was the close yesterday. Pull it on over. Look at that. Right there. That was how ES closed. Russell closed down. So there was strength going into the close yesterday on S&P 500. And then we kind of chopped sideways all night. And now just pushing a little bit higher as we come into the open here. Really testing the top of that box. And we may push higher. Super cautious zone. So Russell, I am concerned that we're going to roll from here. Very, very, very concerned. There is the market open. Oil decided to push a little lower, right down to the arrow. Right down. That one's closed, and that one's closed. Right down to the arrow. Now we have further support down here at 76. If we're going to go down and test that, that's kind of the bottom of this consolidation we did back here in February. So we'll see if we can hold this and bounce higher. That would be kind of what I expected. That's actually an echo of the move off the top here. Why is that drawn there? Because that move down and that move down are equal. Like, that's what I call an echo in the market. All right. To the naked eye, you're like, I don't even see that. But right there, I just drew it for you. That move down off the high. This little multi-day retrace off that high. This move down. They are equal at this point. We can hold this area right here. This tends to be a strong support in the market. Or we can push the 1272, which muddies up the ability. If we hold right in here, this is a corrective move down. Highly likely to get continuation up. That continuation up looks like this at this point. Let's delete that line so it doesn't confuse anybody. That right there, that 618 is kind of like the activation level, just like the S&P and the NASDAQ and the Russell, where I was talking about the 618 right there. That's kind of the level right there. We've got resistance. We get above that. And it's looking like we're going higher. 90, 94 are the targets if we get above there. I thought I did find it amusing. They were talking about on the news how higher gas prices nationwide, and locally it went up, so many cents per gallon in the last 7 days. And experts say it's attributed to the rising prices of oil. I was like, wow, that's just bad reporting right there. I mean, look, prices of oil have been dropping since April, yet prices of gasoline have been going up at the pump. And prices of gasoline on the futures have been dropping. So, I mean, unless we're talking about like a 1 month lag or something like that, it's just somebody writing a story that didn't even look at the charts. I don't know. What expert did you ask? Certainly not one that knew anything about the actual prices in the futures market. GC still consolidating here. On the smaller time frame, we have a reversal off the lows overnight. Potential to go higher. Just not convinced yet. We are pushing through that trend line I drew. Trend lines tend to be kind of the weakest of resistance lines or support lines or, technical analysis lines. But it can be an initial indicator. So we came down, same pattern I was talking about there a minute ago on oil. First move down, retrace. Second move down, we held that 1272 a little bit deeper than just the echo. All right, we did a little extension. We tested it once, twice, 3 times, and now we're moving back higher, back above here. If we can hold here, break out above these highs from yesterday, these highs just right here, it's an initial indication that we could go higher. Now, the levels here, draw off the high, down to the lowest low, which was right there. That initial resistance right in here. If we can get above that level, we're looking for 24.91 on the next extension. That zone right up in there. And like, as I always say, these are zones, not definitive levels to the penny. And we're talking about something like this. So if you're going to shoot for that, 24.80 might be a much better goal line target than 24.91. Could you make pretty good money on that? Yeah, that's like $100 up right there on a price of gold. A leveraged instrument could return pretty nice returns. All right. No, I'm not saying you should trade leverage. That's leverage is dangerous. So be careful. It's like Kimberly was talking about yesterday. Oh, I hope that's figurative, soaking yourself in gasoline and playing with matches, because that sounds pretty bad. That's what leverage is like, though. Like, you can burn you and your account, and you can feel pretty bad for a long time. So be careful. Leverage cuts both ways every time. It can be really good. It can be really, really, really bad. And Bitcoin. What are we doing? Again, same pattern. We did the first move down, the retrace, and next move down, we pushed out to the 1272, just like on gold. Potentially reversing here. Our trend line, though, much higher up here off the highs, much higher. So we're just kind of in no man's land here for the moment. Just kind of in no man's land. Now, could we push deeper? We absolutely could. Absolutely could. We've got that resistance zone hanging right here at the 618. If we get extensions, we're actually looking for a move on up to 79,000 now. 77 has been my target for a while, possibly 84, but with the move down deeper, 87 could be in the cards now. Like I say, when we correct out price action, corrections are good for being able to go higher. All right, they're positive. They're a positive mechanic of the market to build the potential to go even higher. So nice, big, deep, fast retraces build up lots of potential to be able to go higher in the market. It seems counterintuitive. Like, how can a pullback generate the potential to go higher? But it's our human psychology. All right. Like, I can't explain the internal animal magnetism thing we have going on, the herd mentality that drives this kind of thing. But the charts prove it over and over and over again. Like, if we get a big, deep, fast correction that bums everybody out, we reverse it and can take it even higher than if we just do a little baby correction and then jump back on. All right. That's kind of it's kind of weird, but once you start learning it, it tends to happen over and over and over. Ethereum here still looks kind of bearish, unfortunately. And we have that deadline coming up, and it's actually, I looked it up, got the numbers in my head now. May 23rd is the deadline, the first deadline for, I think it's VanEck spot ETF. And then there's somebody else was on the 24th, and then there's a few out further. It's widely speculated that that's not going to happen. And Gensler was on Gary Gensler, head of the SEC, was up in front of Congress, and I guess he talked to McHenry before the hearing and expressed his thoughts that Ethereum was a security and not a commodity. And then he gets up in the hearing and wouldn't testify either way. Wouldn't even say his opinion on the record. So this is a big question mark. Is this going to get approved? Is it not? There's definitely people that feel both ways, and that's kind of what makes a market. So what am I talking about? Let me pull this up off of Discord really quickly. Right here, the deadline, May 23rd. Yeah, VanEck. Then ARK is right behind them on the 24th, and then Hashdex on the 30th. Then we're out to June with Grayscale and Invesco, iShares, which is BlackRock, out into August, and Fidelity out there in August also. So there you go. Now, Ethereum is fundamentally different than Bitcoin. There's no supply cap on Ethereum, so be careful. Be careful. Yeah, I told you I watched your stuff, babe. I told you I watched it. Anyway, dollar still hanging. Don't have any clear picture right now. This looks like a three-wave correction, potentially. Same kind of situation where we had this first move down right there, multi-day correction up, and then a bigger down. And it obviously exceeded the first move down. We put an actual fib line to it with the fib-based trend-based fib extension tool in TradingView. First move down, retrace. Second move down, actually hit this 1618. So, but it held at the 1272 for 3. This is the third day now. If we can hold that and turn higher, break back on through this kind of consolidation stuff, we're heading up here to 108.50. If we break down below the roadmap line, though, this move is done. It just pushed extra deep into resistance. Statistically, we're going higher, but there are that 20 to 30% of the time where we push deep into that resistance and then reverse and go lower. If we're going lower, those prices are going to be way down here in the 90s to find a bottom. So right there, that's kind of the levels here. Either we break out above those highs right there, or we bust down through the roadmap line. So there's your support, there's your resistance, and this chart is getting muddied up with lots of prior target zones. And let's just clear a few off here. Just clear a few things while I'm talking about it. So right there, that's kind of draw this as the support zone right in here. We get below that, likely to go on down. We get above this recent set of highs, likely to go on higher. So there you go. That's the long and the short of it. The long and the short of it. Get it? All right, what's moving today? Dave. Look at Dave popping higher. Dave, you didn't even know you were running higher. That's Goose's real name. And, well, man. That looks, whew. I mean, I guess with the reverse split back here, that was probably a SPAC. Get a reverse split, continue lower. Now potentially working on a reversal, but jeez, man. Holy cheese and crackers, Batman. That just, it's got a long way to go just to get back to the SPAC investment price. Remember, while this thing was post split at 452, it was never at 300. So people that invested here invested probably at $10 or $15. Reverse split, $10 because 1 for 32 makes $10 into 320. So that's just crazy. I don't know if I'd mess around with this. Well, they seem to have flipped it around into profit. I don't know. They might recover something. Major bank, huh? Dave. Let's go down to Dave. Dave Incorporated. All right. Well, SYM chopping in the watermelon seed squeeze. Don't like it. COHR. Potential roadmap bounce. Let's just clear this off. Oh, clicked on something. Remove drawings. That high. This low. We popped into the 618 and rejected. We've got to get a daily close above that to set it up for 74. Target dog. Probably looks like roadmap line would be my guess. If it misses it now, like it's missing a heck of an opportunity. I mean, this could be just a 4-hour bounce right here. Potential for a lower time frame bounce. So that's one you'd have to watch. Right there. Statistics on this baby. Let's just turn them on real quick. 70% of the time on the 4-hour. And on the daily, 79% on the daily. Usually lasts 61 days if it hits and bounces. On the 4-hour there, jump it back. Usually lasts 21 4 hours, so you'd have to do the math on that. 4 hours times 21 divided by 7 hours a day, and blah 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 blah. Come up with the days, and 5 days a week, and 2 days on the weekend. Anyway, gets to be a lot of math, but if you were interested. So if this is going to bounce up, it had to break above that 618. Otherwise, we could continue on down and do the daily roadmap bounce, which would actually look better fib-wise and all that stuff. So we may actually see target drop on down. Earnings are not for a little while yet. Still another 2 weeks out on earnings. Oscar just keeps bumping it higher. Oscar Healthcare. I'm not big on trading healthcare. I'm not. But that did rally right up to the 1272. It was a 4-hour bounce. Well, not even a 4-hour bounce, really. Looks like a 1-hour bounce, but not very clear. That trade worked out in there. Of course, it was an even smaller one. And right up to the 127. Sometimes they work. Anyway, we'll have to wait for a retrace if you're looking for that one. Zeta Holdings, nice pop. UBS, just choppy. I would be very careful. On this. Above the 618 could be set up for a run higher. 34 would be the upside. MWA, Mueller Water Products. Those are pumps, right? Yeah. Mueller pumps. And they actually make fire hydrants too. Pretty sure. How do I know this stuff? Because I specify this stuff on plans. Pretty sure Mueller water fire hydrants are one of the major brands in the United States. That looks like 20 is probably the upside. So this is not a big mover. I mean, it took from So from September 22, back when the bottom of the market was, up through right now, to go from $10 to $18. Sure, that's 80%, but that's only an $8 move. And would you have bet all your money on that? I wouldn't have. I wouldn't have. Apple, biggest buybacks in history. Did not close above the 618 yet. Yet, if we do, it's game on. This could be now, as I was speculating last week, like is Apple more important than the FOMC meeting was? If we get above the 618 here, the odds are we're going right up here. And what are the odds? 77% odds right there. 77% of the time, we rally after getting a daily close above that 618. That's pretty strong, you ask me. Now, this one back here failed. So it doesn't happen all the time. We still have, 20, 22% of the time fail. But I like these odds. I really do. That's why I'm attracted to this pattern, because it, more often than not, works out every single time. More often than not. So looking for that daily close above the 618. I'm going to set up the odds to go up to 208. Already bought a few calls out several months. We'll see if that plays out. And just kind of sitting. I didn't publish it as any kind of trade for anybody. I'm just playing the odds here. What could you do? You could sell a credit spread down here under the roadmap line. If that was your way to play. You could sell puts down here below the roadmap line. If that was your way to play. You could buy a long call. You could buy some shares. You could buy AAPU. Just buy a few shares of this. 2x leverage on Apple going higher. Entirely possible, plausible, all those different ways to play. AAPU here, if, this is leverage, so be careful on that. Possibly 33. Take your 25 to 33. Not bad. That's that $8 I was just talking about from the other one. $8 potential profit right there. Mueller. FIS, nice potential. $76 on the upside. GFS, that's not Gordon Foods. Popping back up. That's been a downtrend, and we're hitting the roadmap line. We've done it once, twice, 3, 4. This will be the 5th time. Can we get above it and stay above it, or are we going to reject and go lower once again? I'm not convinced at this point. I wouldn't touch it. NVO, the NVO and Lilly both look very extended and look like they need a retrace, but I wouldn't count them out. They're both doing multi-billion-dollar round-the-clock construction projects to expand their ability to create GLP-1 drugs. The demand is ridiculous, and they're trying to catch up to meet that demand. Both these companies have round-the-clock expansion construction plans in the works, multi-billion-dollar construction plans so that they can produce more Ozempic and Wegovy and Zepbound and all that stuff. So GLP-1 drugs, I've seen some hit pieces on it lately, but for the most part, it does good for people that can't control themselves. It seems to be an anti-addiction medication, as much as it is a weight loss and as much as it is as a diabetes. It has huge potential, and as long as it's not killing people, it's probably going to be crazy big. And bandwidth, nice. So that was a higher low, barely. I can only see it by putting my mouse over there. If this little guy over here stuck down just a little bit, so we can do a retrace on that. It was a 3-wave in fashion. The first move down much bigger than the second move down, but it did hold a higher low. We are above the 618. We could be looking at 39 up here as the target. Now, this is not, I don't think this company is going to have the history of, it only goes back to 2018. On the daily chart, we don't have three whole times in the past. It is hit the 1272 every time it's set up. And this is obviously a lot bigger pattern than 11 days. So it may not, I can guarantee you the reason the thing didn't take a trade here is because it's took way too long for this to shape up. All right. I have a time limit on the setup. That did not qualify as the setup time-wise. So that gives me caution right there. But hey, looks like we're going to go ramping right off. And that was it for gainers. There were not that many on the list today. Decliners, ATKR right down to the roadmap line. And a 3-wave. 1, 2, 3 right there. Beautiful. Be hunting for a bottom and a move back up to the 618 for a move out to 207. Could be pretty strong there. Really strong. Race, probably setting up for a retrace. At least to the roadmap line, if not something deeper and more nefarious. Datadog also reporting earnings today, and looks like we rolled on down. Let's see. 1, 2, 3, right into the resistance where the first move down. This is the pattern right here. We look for that move and that move to be equality. And we look right there. There it is. It's not equality in time. It's equality in size of move. That can be it if we turn and burn. But if we get continuation, this is why you don't buy until we're actually on the way up. If you buy now, it's a knife catch. We could go fill this gap all the way back down over here. Get the right tool. This gap I'm talking about right there. We could go fill that gap, which we're not far away from. Like we could come on right on down like that. ROK, Rockwell Automation, seems to be not doing anything super bullish. And that first move down could result in the next move down, although we already did it once, but we could get the extension. I would be very careful. This is not a sign of a healthy, strong economy cooking in the background here. MDB, looks like that one's also going to push lower. Retest again, bounced off the roadmap line. That's not the kind of things we're looking for bullish. Builder's first source was rocking, now retracing right back down to the zone. I'd like to see this push just a little bit lower off of that move up. Could get a measured bounce, but we can stop right there at the roadmap line. It can hold, turn, and burn. We get back above the 618 right here, up above 198.50. Cuts us up for 220 area, maybe 240 area. And statistics on that one, like 92%. That's a pretty banging win rate right there. I would probably set some alerts right up there at around 198 if I were you, and consider taking advantage of that move. Something with 93% win rate. And it's got 14 closed trades. So, I mean, that's, if it sets that up, that's pretty sweet. Now, would I buy right now? Absolutely not. This can fail, all right? If it never fails to get up here above the 618, you might be like, well, what about that? Well, that didn't touch the roadmap line before. Like now, it touched the roadmap line. That's the requirement to set this trade up. A retrace that touches the roadmap line, then moves back above the 618. That's the activation. The target 90% of the way to the 1272. Be conservative, all right? That's for the 125, 124, somewhere in that zone. Now, it can fail. It's failed, 7% of the time. 7 out of 100 trades, which, we don't have 100 trades, we have 14. So be careful, all right? This could be another one that fails. Just throwing that out there. Disney, back to the roadmap line. It's not magic, it's just the pattern. I looked at that last night. I was like, I bet that's going to the roadmap line. Right back down. Got a little bit deeper to go. We can get there. Let's see what the statistics say. Survey says 90% of the time, if we hit the roadmap line, close back above the 618, game on, baby. So this one's pretty strong. Also, I like it. I like it. Let me know in the chat what you think about these new statistics and stuff I'm throwing out there. I'm definitely a technical trader. For a long time, I was just kind of rolling with my own personal statistics. Now I can actually put numbers to each chart, a little more specific. Hope people like it. That's the kind of stuff I'm working on building in the background. Took me a lot of work. Somebody asked me in the chat if I'd just give that away. I was like, shoot, no, heck no, man. That's it's not the kind of stuff I give away. I'm sorry. Maybe one day in the future when it right there. That's the kind of stuff that it's powerful. I mean, it really is powerful. Huge, it's powerful pattern and powerful statistics to help you make better trading decisions. And anyway, I spent a lot of time and effort digging through making that happen, making that thing work. It's got simplicity to it, but it's also very complicated. I guess you might say it's a very concise, short set of code, but it has a lot of my knowledge built into it. Celsius, it was declining, but it may actually launch off of here. We came down close to the roadmap line, didn't quite get there, didn't quite touch it, but the 7 times it has in the past, and then closed above the 618, 100% of the time we go on an extension higher. Strong stuff. Now, somebody might be like, why is there no profit factor? So a profit factor is the win-loss ratio, okay? The amount of, it's the ratio between the gains and the losses. So if you have a 100% win rate, you have no losses. So there's no profit factor. Kind of, everybody's like, well, there's always losses, but not in this. Not yet. There hasn't been. Not on that one. So it's a rare instance where one of these didn't make a loss. Now, we haven't hit the roadmap line on the daily. So this isn't actually set up on the daily. Now, it may be a 4-hour because we did definitely hit the 4-hour, but this might be taking too long. So that's the caveat here, is that this might be a little long in the tooth here. And the statistics on the 4-hour are only 80% instead of 100%. I'll get a little bit of uncertainty there. Just throwing that out there. Back to it. NTES just churning. Hey, you know what? If you want me to review your ticker later on today, 5 p.m. Eastern, set a reminder in your phone, or just subscribe and hit the alert, the little notification thing, the little bell with the doodads. And 5 p.m. I'll be live for at least, gosh, we call it 30 minutes of awesome. I do at least 30 minutes of requests, but lately it's been pushing 2 hour, an hour and a half of requests. So I'll stick around usually until everybody's covered, hitting all the requests, and nothing's really off limits. Now, if it's something that I cover in depth in a service, I'm not going to give you in-depth analysis. I'm just going to give you a high-level analysis on it. But bring your ticker. I'll recover it. I will review it for you right there in 30 minutes of awesome. So hope to see you there. I can't do the class without people, so I need people to be there. And so FNGU, so the 3x leverage ETN, and we may be pushing on out. We did the we did the roadmap bounce right there. Back here, 388 would be the upside. Oh, there's a new strategy. Look at that, firing off UPS 30-minute right there. Let's go look at it. I'll just give this away for free. Like, oh, hitting the touching keys. So this is a setup potentially. What did we just fire off right here? Look at that. Last time, that bounce, right up, got out right at that high. Did another bounce, getting in right here. Actually, it looks like it was a little bit shorter term bounce that it picked up. 77% of the time, we go out to the 1272. So this one actually is probably from right here to right here is what it just picked up. That closed right there. So we're not targeting something super crazy big. This is where the little bit of nuance in the system comes in. Yeah, right, that low. As I zoom it up, that low, that high, right there is what it picked up. And let's zoom her up. So what kind of target we're looking at? Probably right around 148.40. Could go 148.45. Not necessarily a huge mover. And there you go. So we're only looking for maybe $1 on UPS on this potential move here. I don't have my fibs tightened up very well. there you go. Back to it. Snow. I'm still thinking snow is going down. I need this to drop. It could retrace. It just, I don't know how long it's going to take to get down here. I believe it's going down to that zone at some point. Now we may do this back up here. Could you make a bunch of money off that? $40 potential. Sure. And then it may do this. And then we may retrace again before we push on down, or it may do this before and retrace before we push on down. But I think we're headed down here at some point. One point, or, you know, sometime sooner or later, maybe later, probably going down here. That's where I'm going to look for a position. Anything above this, I'm not really too interested in right now. Tesla is just consolidating after that bounce off the bottom of the roadmap line. I'd like to see this gain some strength in this area and then break on through. Got to get above the roadmap line. It hit that resistance, came up shy of filling the gap, which is double resistance. All we can do is wait. See if the bulls got it. PLTR looks like probably coming back down to the roadmap line. Dash tagged the roadmap line. Just sitting here. Activation is up here. Maybe like, what are the statistics, JT? Show us, please. 100% on one trade that it's done in the past. So not a long history of bouncing off the roadmap line on the daily. Baidu is testing the roadmap line. Can we get above it? Can we hold above it? That'd be very strong. I want to see us also clear these prior highs over here. We only made a higher high than these last two. I'd really like to see some continuation. Let's get us on up here. We have the potential to go way up here if this thing will shape up. Right now, not trying to be too optimistic until we can start actually getting above and staying above the roadmap line and get out of this consolidation. PDD, potentially rejecting again, but it did have a daily roadmap bounce. Buy right there. 157, 169, potential upsides. Statistics, baby. 100% of the time on 4. It's done it 4 times in the past. Be a shame to wreck a perfect record now. Beyond looks like a piece of garbage on the chart. Holy moly. Holy guacamole. That's probably going lower low. NVDX, 2X, NVIDIA getting slammed a bit. C-Web coming back. Probably got to come back to the roadmap line, looks like. If not now, then sometime in the future. Baba is trying to, basically, Baba and Baidu, almost the same pattern. Trying to get above and stay above. Potential for this to get legs. So if this does like a 618 retrace right here, that low, that high, this may be your last time to load up for a while. This may be the last opportunity to add some shares for a long-term bigger upside potential on Baba. And we have this bigger move up and correction, which could lead us. This is one of those crazy potentials right here. We could be looking at a move up to 200 right up in this zone. This could take years. Like this could be 25, 26, 27. But we could be looking at something like that. You know, this was a years-long correction. This could be a multi-year expansion. Could last 3 times longer, 4 times longer. So we could be looking way out here. PLTN, that just looks like a piece of garbage chart. That's SPAC for you, being crazy. Must have announced who they're going to target to acquire. A little bit of lightning in there. Not the kind of thing I like to play with. Unpredictable. And bias for the day, extremely cautious. Extremely cautious. Like extreme caution to the extreme. This may be one of those where the day kind of dictates what my feelings are. So if we, look at that so far. So far, doing a little spinning top, little baby one, and I really, really, really want to see this get above here. And I prefer the continuation higher, but I am keenly aware that this may set up for a continuation lower. Please be careful. Come back and see me tonight at 5 p.m. Eastern. 5 p.m. Eastern. Set your alarm, set your calendar, click the alert. If anything I said was helpful, give me a thumbs up.